What's going on YouTube? So in this video, I want to talk about how to get approved for an FHA loan. I want to go over what are FHA loans, who are FHA loans for, what are the loan limits, as well as what are the minimum guidelines for purchases and refinances, as well as the closing costs and mortgage insurance that's associated with FHA loans. So if this sounds like your cup of tea and you want to learn more about FHA loans, do me a favor, subscribe to the channel, stick around to the very end, and of course, if you have any questions whatsoever, drop them in the comment section below. So what are FHA loans? Now, FHA loans are going to be government-backed loans, meaning if you have an FHA loan right now and you were to default on your mortgage, then the government will pick up where you left off and they will cut a check to the investor, to the lender, to the bank, whoever is carrying this note that's secured by your home, aka your real estate. So these loans are essentially going to be a risk-free loan for lenders as well as investors who originate FHA loans. And that's not necessarily going to benefit you as the borrower. This is going to be more beneficial for the investor who is going to originate and loan you that money to buy a piece of real estate. Now, FHA loans promote home ownership to individuals like you and I by giving us better terms in the form of lower interest rates, lower down payments, and easier loans to qualify for. And this is also important to know and understand because it's going to make sense when we talk about the mortgage insurance portion of this video. Mortgage insurance, again, is to protect the lender and an investor in the event that you default. So understanding that you're going to have extra costs that's associated with FHA loans is going to help you determine if these loans are going to be the right program and fit for your endeavors. Now, who are FHA loans for? FHA loans are going to be for individuals who intend to occupy a home as their primary residence. Unfortunately, you cannot use FHA loans for an investment property, but you can use them for a home purchase that you intend to move your family into as your primary residence. Now, these loans could be used if you are a first-time homebuyer. However, you do not need to be a first-time homebuyer in order to take advantage of an FHA loan. Now, FHA loans are also going to be great for individuals and borrowers who have lower than average credit scores or FICO scores. So if you're an individual who has a low FICO score, let's just say in the 500s or in the low 600s, you still can qualify for an FHA loan as long as all other minimum qualifications are met. Now, here's an example of the difference in interest rate if you had a FICO score of 600 versus a FICO score of 700. Now, at the time of me shooting this video, if you had a FICO score of 600 and you were looking to purchase a home with the minimum down, which is going to be 3.5% down on a $500,000 purchase or acquisition, your interest rate would be 5.99% if you had a FICO score of 600 versus if you had a FICO score of 700, your interest rate would be 5.49%. Now, that's a difference of half a point or 0.5% in interest rate versus a FICO score in the low 600s to a FICO score in the 700s. And that's what makes the FHA loan so advantageous, because no matter what your credit score is, you're going to fall within the same ballpark range as far as an interest rate goes with a purchase or a refinance. Now, you could only have one FHA loan per borrower if you're looking to purchase real estate. However, there are some exemptions. For instance, if you have an addition or two to your family size and you need a larger footprint as far as square footage to accommodate your growing family, then at that time you could apply for an additional FHA loan. Or another exemption is going to be if your job relocates you and you have to move 100 miles away from where your current FHA finance home is, then you can apply for a second FHA loan, and you could either sell your first FHA finance home or you could keep that FHA finance home and then turn it into investment property at that time. So there are rules and restrictions to FHA finance homes. However, there are exemptions to those rules and restrictions. So let's talk about the loan limits for FHA finance homes. For a one-unit property, loan limits are going to be anywhere from $498,000 for low-cost areas all the way up to $1.149 million for high-cost areas. For a two-unit property, you're looking at $637,000 all the way up to $1.472 million for a two-unit property. For a three-unit property, you're looking at $771,000 all the way up to $1.779 million for a three-unit property. And for a four-unit property, you're looking at $958,000 all the way up to $2.211 million for a four-unit property. Now, anything above $766,500 is going to be considered FHA jumbo loan limits, and these are going to come with slightly higher interest interest rates and restrictions depending on the county that you're looking to invest in. So if your income supports that loan limit and your county also supports that loan limit, then you can qualify for a home loan above $766,000. For more information about FHA loan limits, click the link below and I'll be able to provide you with a website that has more information about loan limits and restrictions depending on your county that you're looking to invest in. All right, now let's get into the good stuff, which is going to be the minimum requirements and guidelines for purchases, rate and term refinances, as well as cash out refinances. Now for purchases using an FHA loan, the minimum starting FICO score is going to be 580. The units that you could purchase or property types that you could use is going to be any single family residence from 1 to 4 units. So you could purchase a detached single family dwelling or a condo as well as a townhouse. The maximum loan to value ratio is going to be 96.5% because that's going to include the 3.5% minimum down payment on FHA loans. However, the maximum combined loan to value ratio is going to be 100% because for FHA loans, you could use down payment assistance to cover the 3.5% down payment requirement. And the maximum DTI or debt to income ratio for FHA loans on purchases is going to be 57%, and that's going to be on the back end. And the back end is going to include your housing payments plus your consumer debt like your auto loans, personal loans, student loans, and credit card minimum payments. Now for rate and term refinances, the minimum FICO score is going to be 580. Property types is going to be any single family dwelling, 1 to 4 units. Maximum loan to value ratio is going to be 97.75% with a FICO score of 620 or higher, and a max loan to value ratio of 96.5% with a FICO score of 580 to 619. Maximum DTI or debt to income ratio is going to be 57% for rate and term refinances. And the great thing about FHA loans is that they have something called a streamlined FHA refinance, which doesn't require you to use your income documentation and employment verification in order to qualify for a rate and term refinance. All you really need is going to be a minimum FICO score with no derogatory marks on your credit profile, and your loan to value ratio percentages are to be met on the rate and term refinance, which is going to be 96.5% if you have a decent FICO score. So let's just say if you purchased a home in the past 12 to 24 months and you used an FHA loan and you want to refinance to a lower interest rate and stretch that loan over a 30-year term so you can maximize the savings per month, you could use an FHA loan up to 96.5 loan to value ratio, which will allow you to save more money on a monthly basis. And if you want to learn more about FHA streamlined refinances and how to maximize your savings on a monthly basis, let me know in the comment section below. Drop your questions in the comment section below and I'll make a separate video or address your questions in the comment section below. Now for cash out refinances, the minimum FICO score is going to be 580 if you're going to use the cash out funds strictly for debt consolidation. For all other cash out refinances, the minimum FICO score is going to be 620. Now same thing for property type, any single family residence from 1 to 4 units. The maximum loan to value ratio on cash out refinances is going to be 80% with a max DTI or debt to income ratio of 57%. Now let's talk about mortgage insurance and closing costs that's associated with FHA loans. Now mortgage insurance is going to be required for the life of the loan for FHA loans if you put down less than 10%. If you put down more than 10% on an FHA loan, then you are not required to carry mortgage insurance for the life of the loan. Now, mortgage insurance is going to be an extra payment that's going to be going towards protecting the lender as well as the government in the event that you default on your mortgage. Mortgage insurance is not going to help you decrease your principal balance, and mortgage insurance is not going to help you save on interest over the life of the loan. Now, for FHA loans, mortgage insurance is going to be factored at 0.55% of the remaining loan balance. So an example would be if you had a $500,000 loan, you would take that principal balance of $500,000 times that by 0.55%. That would give you $2,750, which is going to be your mortgage insurance premium. And you'd simply just divide that by 12, which would be your mortgage insurance payment on a monthly basis. And that would be $229. Now, typically the starting premium rate is going to be 0.55% of your remaining loan balance. However, as you start to pay down your principal balance over the years, then your mortgage insurance insurance premium or your mortgage insurance rate will decline as well too. Now there's also another fee that's associated with a mortgage insurance, and that's going to be your upfront mortgage insurance premium that's factored at 1.75% for FHA loans. So let's just stick with the $500,000 loan example. If you were to borrow $500,000 to buy a house and you want to use an FHA loan, they would charge you 1.75% of $500,000 at closing, and that would be an extra closing cost of $8,750 for your upfront mortgage insurance premium. Now, as far as closing costs, since everyone's scenario is different and everyone's purchase price is going to be different, closing costs are also going to be different with FHA loans. However, a rule of thumb to calculate the closing costs on FHA loans are going to be 1 to 3% of your purchase price. So an example would be if you are to purchase a $250,000 property using the 3% rule for the closing costs, you would incur closing costs of $7,500 on a $250,000 purchase. However, if you were to purchase a $500,000 property and you were to use the 3% rule, then you would incur a closing cost fee of $15,000, and that's going to be a rough estimate. Just be mindful with closing costs, you're going to have origination fees, lender fees, escrow fees, attorney fees, and you're also going to have to potentially pay prepaid taxes and homeowners insurance at closing when you acquire a property using an FHA loan. Now, the best thing that you could do to get the most accurate estimates on closing costs for a purchase or refinance using an FHA loan is to meet or reach out to a loan officer in your given area so that they could give you a loan estimate for your specific scenario. All right, guys, this concludes the video of how to get approved for an FHA loan. If you like these type of videos, if you like the style and format of these videos as far as the minimum loan guidelines, the loan limits, as well as the estimated closing costs, let me know in the comment section below so that I could shoot more videos just like this. If you want to learn more about FHA loans or any other types of loans, do me a favor and subscribe to the channel and smash that like button so that YouTube knows that this is really good content and it can be shared and distributed to more people just like us. Other than that, thank you so much for watching this video. You are truly appreciated, and I will catch you on the next video. Goodbye for now.